A lot of tech names have been roughed up this year. When it comes to thinking about tech that could be a good play for the long term, we wanted to explore that in today's Hot Picks section. David Volpe is joining us. He's Deputy CIO and Portfolio Manager at Emerald Advisors. David, nice to have you with us. I was alluding to the fact that today you have seen investors taking a second look at beaten up tech. When you're thinking about investing in technology, what goes into your frame or into your thinking, more broadly speaking?
Well, good morning, John. So for us, as a small cap, mid cap, and all cap growth manager, we're looking for growth, whether it's growth in sales as well as growth in earnings. But it's paramount that we have strong expected growth as well as strong management. We've invested in a lot of companies in the past that sometimes don't have the best management. We've learned you have to have strong management that's going to be able to put together that growth strategy.
Okay. Now, obviously, there's been such excitement around AI, but as some of these growth companies saw their stocks surge, investors hit the pause button, maybe because they thought valuations went too far. We just saw NVIDIA, the dominant name in AI chips, remind us how quickly they're constantly working. And I do wonder what you think of a company like NVIDIA in this frame, in this context.
John, we love NVIDIA here. Let me throw out a couple of statistics, which I think are pretty astonishing. For our analyst estimate revisions, as they get revised on a weekly, monthly basis, NVIDIA's sales growth has been revised upwards for this coming year, FY25, by 53%, and over 50% on the earnings side. So those are revisions upwards. And yet its valuation has dropped by 32%. For 2026, it's even more astonishing. We have sales and earnings growth that's been revised upwards through the year by over 70%. And again, with on a price to sales or price to earnings basis, the valuation has dropped by over 30%. I don't think people realize that, how cheap this has got, trading at next year 20 times earnings, with earnings expectations up by that much.
Well, interesting context on that one. And of course, way back when, we thought of NVIDIA as a maker of chips for gaming. In the gaming sector, Take-Two Interactive might be a name that people have heard about in passing, but its games, including Grand Theft Auto, probably turn on the light bulb, and they've been working on the latest installment of that franchise for a long time. What about that business appeals to you?
Well, Grand Theft Auto 6 is supposed to come out this fall. Normally when that comes out, Take-Two's earnings literally triple from their static earnings growth rate to post GTA launch. So we're talking about $9, $10 in earnings or more in the year after GTA 6 or whatever GTA it is comes out. So if you put a 30 multiple on it, you got a $300 stock. We also like it because video gaming is extremely economically resistant. People continue to play video games, buy video games, and it's a cheap form of entertainment that's approximately 75% less expensive than other forms of entertainment, be it movies or going out or whatever. So very, very economically resilient and tremendous growth coming over the next couple of years.
Okay, and then the third name that you brought to the table today, Solaris. This was an oil field services company, but they went through a transformation. Is that correct?
That is correct. They made a purchase of a power provider last year, which has radically transformed the business.
And what does it enable them to do, in your opinion?
Okay, so Solaris now has turbines, natural gas turbines, which they hook up with data centers. So, for example, their largest customer is XAI, which is owned by Elon Musk. They'll be providing approximately 500 megawatts of power to XAI, and 500 megawatts is approximately equates to 400,000 households. So they'll be providing that for up to the next 6 years. They've got 700 megawatts targeted in terms of already purchased the actual equipment, with a goal of 1.4 megawatts. So just tremendous growth, because the grid is not stable or not capable enough to provide infrastructure and power to these data centers. And they're seeing that more and more. So they're coming to companies like Solaris, which is the leader in this business, for that power solution, both in terms of the power and the regulation of that power.
David, good to get your perspective today. Thanks for joining us.
Thank you, John.
David Volpe joining us.